You're listening to Outcome by Design with Paul Weinstein, a series about the untold stories of the tech world. Let's get into today's episode.
Okay, my guest today is the iconic Jim McKelvey. Jim is a serial entrepreneur, inventor, author, philanthropist, artist, and probably a dozen more impressive adjectives that I'm leaving out here. Jim is the most famously the co-founder and still board member, I think, of Square, now called Block, which he started with Jack Dorsey. His book, The Innovation Stack, tells the story of that journey and how its lessons can be applied to entrepreneurship in general, and is a new classic in the genre. Jim has also founded Invisibly, a project to rewire the economies of online content, Launch Code, a nonprofit that trains people to work in technology, and been a member of several VC funds. And in 2017, I believe, he was appointed as an independent director of the St. Louis Federal Reserve. So I'm sure I'm definitely leaving stuff out here, but I think that should give you the gist of the scope of Jim's background. So welcome here, Jim.
Thank you, Paul. It's funny to hear all that stuff read out. It seems like a lot. It was over many years.
It's still impressive. So just to give you a little background here, what we do at Outcome by Design is we try to get a better understanding of why things happened the way they did, and then hopefully extract some kind of wisdom from that for our listeners. So it's really not the press release version, but all the real life kind of unsexy parts of the whole thing. That's the interesting part for me. Now, what I love about your background is that you are all over the place, right? Obviously, you co-founded one of the most successful companies in Silicon Valley of all time, but then you spent a ton of time going backwards, which is rare, trying to understand where that success came from. And I think that says a lot about who you are and how you think. You founded a fintech VC fund that focused on, if I get this right, not building companies to change the world, but are meant to be sold off to bigger players in the sector, which, by the way,
strictly a moneymaker.
Yeah, I mean, but it's the complete opposite of the philosophy that you talk about in your book.
Yeah, it's exactly not what I do in the book. And it's just for money. I mean, I'm a co-founder of the fund. It makes a lot of money, and it's kind of fun, but boring in some ways.
I think it's great. It just shows the scope. You know, you're a director of this, the Federal Reserve in St. Louis, doing whatever it is that Fed directors actually do, and you're blowing glass in your art studio. So, when I look at your background, what I see isn't necessarily so much just a born entrepreneur, although undoubtedly you are that, but someone with a real restless mind.
Did you say born entrepreneur or bored entrepreneur?
Well, you said bored. You said bored.
Both. I think both would. I think bored entrepreneur is actually a better term.
What's the bored part? Where you get bored easily?
Yes. Yeah. I mean, once it starts working, I kind of lose interest. So I really spend my life focused on stuff that doesn't work, as opposed to things that are working well.
Yeah. No, I get that. One of those California expressions that I hate is if you're bored people are boring, which I think is completely the opposite is true. But you definitely fall into that category.
But bored entrepreneur, I'll take the title.
Okay, bored entrepreneur. And I'll give you somebody who's just fascinated with the why of things, which is me too. So that's why I think you'd be great on the show. So few questions for you. Things are obviously getting much tougher in the startup world. So unless you're an AI company or, an already profitable startup, getting access to money, to capital is difficult. So all of that philosophy of disruption and passion for changing the world and all those things that you talk about in your book, and people talk about Silicon Valley all the time, all that has gone from, do whatever you can do at all costs, grow as much as you can, don't worry about money, to, hey, whoa, wait a minute, what about profitability? So you've been on all sides of these questions, right? You've had an unlimited amount of money, and now you're funding companies that, are meant to be sold. So the question that I have for you is, what advice do you give to founders who are suddenly in this situation where all the rules have kind of just changed? If you were in them, have you ever been in that situation? I don't think Square was ever there, really, but I'm wondering,
Square started there. I mean, Square started in 08, 09. When the funding map was even worse than it is today. So we started right at the beginning of the last serious recession. As a Fed chair, I would argue that we're not really in recession yet, although funding has dried up a lot for startups, it's still not a full-on recession. So yeah, what we had was actually worse than what we have now.
Yeah, it was bad. I remember. Um, you had a famous founder amongst yourself as well, but so I think it made it a little bit easier for you. But
Jack wasn't that famous when we started Square. I mean, he was the other guy at Twitter,
right? That's
that
true.
had been kicked out. So it was Biz and Ev who were they were the face of Twitter, and Jack had just been kicked out, which is how we got back together. I mean, the whole genesis of Square was they kicked Jack out, and then he came back to St. Louis, where we're both from, and he asked me if I'd start a business with him, and so that was the path that led to it. But it was funny because I remember watching, sort of with rapt attention as my friend got more and more and more famous. But he didn't start off that way.
That's good. It's hard to even remember back then when he wasn't a household name.
Nobody knew who he was.
Well, just put yourself in the position. You know a lot of stuff now. So put yourself in the position as, put on your Fed chair hat or your startup hat, and you've founded a company. It's the first time you've done it. You've raised $50 million or so, growth at all costs. Money was easy, spending a lot of money, and all of a sudden everything changes, right? What do you do?
Man, you better get profitable fast.
But what if that's not possible? I mean, that's just not going to happen for the majority of these companies.
How much do you have left?
Let's say you got.
Yeah, go ahead. Let's
say you got half of it left. You got $25 million. You're burning.
Oh, no problem. That should last years.
Well, I don't know. Not now. It's typically you're burning $2 million a month.
On
future,
what?
Mostly
on
people
buying users that are have negative economics. I mean,
but
that's not a business. Now, look, if you can sit there and make the sort of the TikTok case, which is we're building another social media play right in Facebook's face, and we need to prime the pump with $100 million before we even see any sort of positive numbers. Yeah, okay, if you're doing something like that, but for the vast majority of startups, the reason you emphasize growth is that growth is ultimately profitable. And the reason we're still not showing, GAAP profit every quarter at Square is intentional, because we have so many growth opportunities. It's like, why would we take something that's growing, 100% a year and not double down on it? So we're, I buy the growth story up to a point, but in a lot of cases, you're growing something that shouldn't be grown.
The reality is most startups need, there's some point or another where you're just spending money, to get customers, to get users, to get presence out there. And you just don't know when it's going to turn. Like at some point or another, you think, okay, well, it's going to cost me less, or my customers are going to become more economically feasible. But almost nobody starts there. Maybe Square was an exception. You're spending money to make money, and you're spending money to get attention. And the problem is, if you're a founder, what you worry about is, okay, I'm going to cut back my spending. I'm trying to be profitable. Then my growth curve just flattens out. And then I just look awful, right? The company just looks.
And you're probably in a derivative business that no one would care if it died anyway. So who cares?
Yeah, that may be, or not, but you don't know. Right? You certainly don't know.
Look, I'm guilty of this. I've got a company right now that I plowed a lot of money into, and we don't really have a product that's, caught on yet, but I think it will. And it's a very new idea that's never been done before, at least never done successfully. And so I'm burning cash trying to get it working. So I am sort of guilty of that, but mostly it's my own cash. So I don't feel as guilty as if I was taking investors' money. As a matter of fact, I give our largest investor their money back. 2 years in, I just give them a 100% refund. I just said, if you're not in for this ride, which is going to be rough, here's your 10 million back, and bought them out. But the idea here is my answer depends on where you are. If you're building something that's never been built before, and there is evidence that the market's going to want it, In other words, you've got an alpha product, you've got a beta product out. People are starting to accept it. And then the question is, well, we just need to grow to this scale in order to be economically viable. Okay, great, burn the money. But that calculation should have been made when you had 50 million in the bank and there should have been a margin of safety. And now that times are tough, you're funded, you're fine. That should be no problem at all. What's less interesting but more commonplace are startups who take whatever they can in their A round and then buy growth, do it inefficiently, and then hope that at some point they're going to be doing well enough to do a B round. And a lot of those guys get caught in economic situations like the one we're in now.
Yeah. I mean, I just think it's from your perspective or the perspective of the founder, it's just not clear. You just don't know where you are. Is this going to catch on? Is it not going to catch on? You're still stuck in your own head and in this spiral of, what you've raised money on and what you've told your employees, that some sort of, unsubjective view of the situation you're in is almost next to impossible.
Well, I mean, your customers are always objective. So they're either going to buy it because they want it, or they're not going to buy it because they don't care. But this is sort of the main idea that I try to put into the book. So if you read the innovation stack, what you'll learn is that there's this invisible line. And on one side of that line, a totally different set of rules apply, a set of rules you've probably never even thought of because you spend your entire life on one side of the line, which is the known solved side. So almost every problem I have every day is already solved. So I got to make dinner tonight. That's a solved problem. I have some choices, go out, delivery, cook. But it's not like if I cook, I have to go out and find some plant that's edible that humankind has never eaten before. As a matter of fact, if I was doing that, which I guess would be true innovation, I would probably kill my family. Like there's a good chance I'll find something that's poisonous or, at least make everybody sick. And innovation has nothing to do with my dinner tonight. At least I hope it doesn't. So you spend most of your time, in fact, some people spend 100% of their life on this side of the line where everything is already a solved problem. And that's why I wrote the book, was that when I realized there was this sort of stark division, not in, what side of the line you're on, but on the tools you need, depending on which side. That's when I endeavored to write the book. And by the way, it's not a book about Square. I mean, Square is a firsthand story that I can tell, but it's, I surveyed, I wrote up 4 companies, but I surveyed about 25 different companies to get the data that I did. And the same rules apply. And the basic rule is if you are out of options, you will by necessity become innovative or you'll die, right? So the startup that you mentioned who, raised 50 and has 25 left, they're not out of options yet, but it might be a good time to start thinking about some of the things that they could do very, very differently. Although the investors, the way you get $50 million is not by saying we're going to do something that's never been done before. You get $50 million by saying we're following a formula, software as a service, or, we're going to do an AI startup, or, we're going to mint this coin. Like sort of the formula du jour changes, but it's always some formula that everybody buys into. And then, you get 50 million. Like if you're doing something truly innovative, you'll be lucky to raise angel funds. You'll be lucky to get your parents to invest. As a matter of fact, your parents will probably talk you out of it.
Yeah. Well, don't you worry that, you suffer from some sort of confirmation bias here? You had the startup that was so wildly successful that now everything just looks like that same problem over and over again.
Absolutely. So, and I discuss this in the book that, if you're lucky and smart or lucky and hardworking, you tend to you tend to attribute the success to the hard work or smarts as opposed to the luck. So I fully admit that I've been very, very lucky. I just don't know how lucky I've been because I like to think that I'm smart and I work very hard. Now, let's assume that I was just super lucky and that everything you're looking at is confirmation bias. That's the reason I surveyed a bunch of other companies to looking for the same pattern. And that's actually what led me to Herb Kelleher. And Herb was the guy that made me write the book. I mean, the actual story of the innovation stack was that I was doing this research kind of for my own, I wouldn't say amusement, but it was just, I was so curious as how Square survived an attack by Amazon. Like Amazon attacks a startup, the startup dies. That is 100% true, except in Square's case. Now, if they're not a startup, it's Amazon v. Google or v. Facebook or something like that. But if it's Amazon v. a startup, the startup is dead. And Square was the first startup that survived, basically a direct attack by Amazon. And so the question is, well, how did that happen? And so I started researching, and then I saw this pattern. And the problem with the pattern was that, exactly as you say, confirmation bias is so prevalent when you're doing historical research. Like you only pick the parts of history that support your thesis. And since all the people I was studying were dead, I couldn't talk to anybody except Herb Kelleher was alive. So Herb was the only founder of one of these companies who was, still alive. So I went down to Dallas, Texas, and I spent a day with Herb. And Herb was the guy that basically assigned me a homework assignment and said, you need to go share this with the world. And that's how the book came to be.
I mean, they're fantastic stories. I mean, and obviously Herb is a tremendously successful guy, but not to just to play devil's advocate here for a minute. I mean, you're still just picking success stories that match your success story. So,
well, what I'm doing is I'm picking success stories that match a pattern. So yes, the question is the pattern repeatable? And I don't know that the answer is yes. I know the answer is yes. It's repeatable, but is it deterministically repeatable? In other words, if you say, I will do this, will it have the same effect? And I don't know the answer to that. And I don't know how to run that experiment. So that's one that I can't run. But what I can say, if you want to get into social science for a second, is that my goal was not to have some sort of how-to book on building, $100 billion companies. My goal was to prevent people who were already on the path to building a $100 billion company from stopping too early. And this is a story that is not in the book, but it was the result of me writing the book because I had some reviewers, and one of the reviewers I had read the book in the early days was a very, very successful guy. And he had, in his living room, there was a painting that was worth more than everything I owned. My Square stock, my everything, just pile everything I had in the world and sell it at full retail. It was worth less than this one painting this dude had on his wall. Okay, so that tells you how successful he was. And he's reading my book. And he said to me, I wish I'd read this when I was 20 years old, because I had a company that was doing this very unpleasant path to innovation, and we quit. He said, if I'd just known that this was how it was supposed to feel, I would have kept going, because we were really close. And I think about that, and I've been there many times. I've given up on stuff when the going gets too rough. And what I know now from the research, and I guess from the writing, because that helped clarify my thought, is that there's no guarantee that true innovation is going to work, but there are signs along the way that you are at least on the right path. So no guarantees. You're not going to get some checklist out of the innovation stack, but what you'll get is this. Well, here's what I hope happens. Read the book, forget everything you learned. Go about your business. 5 years from now, everything's a mess. You're trying everything you can think of. It's not working. You keep trying new stuff. A couple of the new things work, but they cause new problems. And you just, all your friends are telling you, Paul, stop, quit, come on, back to the herd. You're getting negative feedback from people who love you, not from people who are jealous of you, but people who genuinely care about you that are going, this is a bad path for you to walk. Okay. At that moment, maybe you'll go, oh my God, this is what McKelvey's talking about. Oh my God, this is how it's supposed to feel. Because all this, the way we fund companies at my VC fund, Yeah, they work really hard, but like there's a formula. It's rinse and repeat. Like you follow the damn formula, you're going to make $100 million bucks. And it's not that hard to do. Now, does everybody do it? No, but like when it succeeds, we're not going, wow, it's amazing. We're going, yeah, we expected that, and when it fails, we go to our checklist and go, okay, you skipped this step or you blew this, and that's why it didn't work.
Well, one, I'm going to give you some money to put in that fund because I want to be a part of that. Not the innovation fund, the one that guarantees.
No, the innovation fund is it's much higher epsilon there.
But the other thought is, so I have an M&A practice, so I meet companies all the time that are kind of on the spectrum of trying to decide where they are on that chart of yours. The famous one is you've got the hype peak, and then it goes down to the trough of disillusionment, and then there's some wavering around and you finally succeed. But from my personal experience as an entrepreneur and from seeing all these other people, when you're at the bottom of that trough or somewhere along the path where things are going okay but not great, you have no idea whether you're going to come out of that and not. And most don't. Most, some fail, obviously, but the ones that are the harder ones are the ones where you just stay at this middling growth level forever and nothing you try makes any difference. And any thought process you're going to do on the front end of that to try to understand if you're going to get out of that or not going to get out of that is really tough.
Yeah, you in that case, most of the time are solving a problem that the world doesn't care that much about. Right. Like splitting the tab at restaurants. People, when we started Square, were like, oh, this is great. We can now split the tab at restaurants. And Jack and I were like, cool. And then we thought it was like, wait a second. Like, like maybe if you're in college or something, or really hand to mouth, or your friends eat way more than you do, then you split the tab. But, sort of generally the way it's done is, oh, you pay for this one, I'll pay for the next one. Like, it's just not a problem people care that much about, So I always focus on the problem. I try to find problems that I personally care about. Like that's the only thing that motivates me right now is stuff that I look at and say, wow, I really wish the world didn't have this problem, because that gives me a lot of energy. And then around me, I try to around me, I try to attract people for whom that problem is also very frustrating. And that's the original team. And that team doesn't last that long. Like once we come up with a solution for the problem, then it's managers and HR packets and meetings and, let's take this problem and scale it. Let's take this solution and scale it. Let's do all the things that a good manager would do. I, by the way, am not a good manager. So don't ever ask me to give you management advice. It will be terrible.
That's good. We can move you to the board once the company gets big enough.
Yeah.
So along those same lines, so you've got a startup that you've been working on for a couple of years. You said you're not sure kind of where it's going. When do you think about pulling the plug? It's your own money, so it's kind of a personal project. I guess it doesn't really matter.
No. I took Peter Thiel's money too. Like Peter's in with it. Look, I've got some very smart money in this thing. I don't know. Like the original problem still exists, so we still care about it. And it's a deeply personal problem for me, which is that I don't like the fact that I'm a product when I use the internet. Like I'm a product, like people are exploiting my attention and I don't know what my eyeballs are being bought and sold for. So with Invisibly, you sign up and then we give you essentially a free subscription. So we're giving you, Wall Street Journal and various super premium publications that you would normally spend, $40 a month to subscribe to. So we'll give you that. But the question is now, how are you going to pay for it? Because it's not free. All right. So you can basically pay two ways. One is you give us data. So we say, hey, your eyeballs and all your activities are being monitored and monetized, whether you like it or not. So your bank statement is very valuable. Like if we can look at your bank statement, I'm not talking about, touching your funds. I'm not going to touch your money. I just want to see what you're doing with your money. That information we can package up and we can sell. And the money that we get back from selling your data, we'll give you that money back in the form of subscriptions. And we used to give it back in the form of money, right? We used to say, oh, here's your money. And we took a 15% cut. Turns out that was a disaster because too many people were faking their data. They were just trying to get the money. So now we make them read something. And this is actually sort of a better thing because, like, yeah, you can defraud invisibly right now and, read the New Yorker, read the Economist, go nuts and read. But the fraudsters don't want to do that. So it's this perfect balance between you being in control and you having access to all the stuff that's normally behind paywalls or festooned with ads or something that's unpleasant. So we're solving two problems.
Yeah, that's the old Mint model and a bunch of other ones where, you give them data and they give you something back valuable in return. But you're the guy I'm talking about. You spent half your money, you're still trying to figure out, I mean, you're not exactly that guy because you got more money, but you spent half the money. You're still trying to figure out, if this thing's going to be successful or not.
Oh yeah. We don't know.
So it never changes. So, you should give yourself your book and then hopefully in 5 years, you'll look back and think, I should have read that again.
It's funny. I do this chapter at the end where I said, basically having written this book, do I actually know anything more than the reader? And the answer is not much. I think I recognize the patterns a little faster because I've been studying them. But there's no checklist for something that hasn't been done before. Like, I would love to say that the micropayments thing, which is what Invisibly is based on, is a solved problem, and I could just, copy the solution from somebody else and apply it to this industry. That would be really easy. I can't. I haven't found somebody else that solved this problem. So we have to invent that solution, and it's brutal. And the fact that, I have all this experience in other industries building other unique solutions doesn't really help me here, except that I guess it's lowered my expectations. Like, I'm not coming to work every morning thinking, okay, we got to solve it today. I'm thinking, okay, we're going to try again. We're going to try again. We're going to try again. And we've been doing that for 5 years now. And we're going to try again next month.
Yeah. Well, hopefully it doesn't keep you up at night like it does so many other entrepreneurs. Maybe it does. Well, you wake up at 3 a.m. and you're like, shit, should have been doing this or should have been doing that. Or
I don't have a lot of regret. When I wake up at 3 a.m, it's usually because I've dreamed some solution, and then I write it down. And then in the morning, 2/3 of it is unintelligible garbage. And occasionally I will dream the solution. So I'm building an eco-friendly diaper right now, trying to save the world for some plastics. And there was a very, very serious mechanical problem that I dreamed the solution for. And now we're trying in the lab to see if we can get it working. So, occasionally I wake up that way, but, not with the night sweats anymore.
Very cool. Well, I got one more question for you, and then I'll let you go. So, back to this prototypical founder that we're talking about here. Do you have any advice about how they get through? I mean, the psychology of the whole thing is so awful for entrepreneurs. It's such a lonely job. I mean, hopefully you have a co-founder or something like that you can share the experience with. But even then, it's this, you're waking up at 3 o'clock in the morning, you're wondering what you're doing with your life. You're wondering if this is ever going to succeed. You wonder if you're just at the edge of being successful and if you just kept going, or if that's totally a myth. What kind of advice, as somebody who's been there, can you give to that person to, help them just get through the day? What makes that process maybe a little bit easier for them?
Well, I think in my case, it's, deeply caring about the problem that you're solving. So what if you don't? Like, what if you just started this company because you wanted to make a lot of money, or you see yourself as an entrepreneur? I'm an entrepreneur. Like, you want to tell somebody that what do you do? I work for myself, any of that sort of ego stuff. Then I think you're dead meat, because those are very weak motivators. Like, at the end of the day, you're probably better off not trying to motivate yourself too long through money or fame or something like that, just because they're historically weak motivators. So I guess I would split the answer into two answers. One is, look, if you're working on a problem that you care about, which is the only thing that I really know how to do, or I should say that's not true. That's the only thing I've ever succeeded at. Like the only successes in my life, you just stack them all up. They have this one common denominator, which is like, oh, I'm going to do this thing that neither me nor most people know how to do. If you care about that thing, then you'll keep going until at some point the pain gets too great and you quit. Now, if you read my book, you will be inoculated against an early quit, because I've seen early quits, and early quits are heartbreaking, because early quit's the one where you go, well, I know from my years of experience, having done other things that did succeed, that this doesn't feel like it's succeeding, so I should stop now. Right? That's the I'm used to success version of quitting. If you're used to failure, if you're an entrepreneur, if you are somebody who has studied things and practiced things where it doesn't always work out correctly, so you're used to that sort of cold shower, then it becomes much more deeply personal. And the answer that I would give is just ask yourself, do you still care? Do you still care? Is it still worth it? Because there's no guarantee. And everybody wants a guarantee. Everybody, I had one publisher not even read my book because she flipped through it and didn't see any checklists. And she took the meeting. This was the stupid thing. Like, she takes the meeting with me, hasn't read the book. And she's like, well, we need you to put some checklists in here. And I was like, okay, my subject is problems that nobody has ever solved. So how do I write a checklist for that? And her answer was, oh, you have 5 to 7 items, because our business books always have 5 to 7 items in a checklist, which I thought was a good reason to not publish with that company. Yeah, but I mean, look, you ask a really good question, and I don't want to make light of it, because I know what it's like to be there, and I know what it's like to quit. And I also know what it's like to almost quit. And I know what it's like to have panic attacks. I had a panic attack when we were starting Square. I was so nervous. I had to pull off the highway. I thought I was having a heart attack. So I don't want to make light of it, but look, if you care that much about what you're doing, then just honestly ask yourself if you want to keep going. And there's some tricks, like I give you some tricks in the book, and how you can kind of manage your brain. But generally, these are very personal questions. Now, that said, if you are experiencing failure, but you're doing something for which others are succeeding, like you're building a, fintech software as a service business, and it's not working for you, well, get some new advisors, because we've got that figured out. I know how to, well, don't call me, but I got a dozen partners who can tell you, they give you a checklist for doing it. We'll tell you every little step of the way, not exactly what to do, but you'd have to be a moron to screw it up. So if you're solving a problem and you're using the wrong YouTube expert, then get a different YouTube expert.
Yeah. Well, that's great. Thank you for your time. I think everybody should read your book, The Innovation Stack, available on Amazon and everywhere, I'm sure.
Ironically, available on Amazon.
That's right.
Yes. The company that tried to put us out of business is now, totally profiting from that act. Although they're not, because it's not selling that well. I released the book in the middle of the pandemic. The book is actually selling steadily, which no book does. Usually there's this spike and then it just levels out. This thing never spiked. It just stayed sort of mediocre, but 3 years and still going.
Are they marketing the book for you? Do they promote it, put you on tour?
No, they don't do any of that.
Yeah.
No, it's just word of mouth, total word of mouth.
Yeah.
And I guess the occasional podcast. So thank you.
I always get pitched the part where you should write the book, and then they want 50 grand or 100 grand to promote the book for you, right? Where they'll go around, get you on the New York Times bestseller list. Actually,
so they offered that to me, and I was such an idiot. For $50,000, I could have had a New York Times bestseller. And my publisher even told me about this. He's like, yeah, you just pay this company and then they make a bunch of people buy your book and, throw it away. But like that counts. And that's how most bestsellers become bestsellers. And I was like, I will not do that. I will just write a great book. And I will, I thought, oh, the quality will come through. And then, sure enough, we launched the thing on the worst day in a century. We launched on March 10th, 2010, like the day, not 2010, I'm sorry, 2020, like the day the pandemic started.
Oh, right. Yeah.
And everything just blew, like the wheels came off of the bus. It was a disaster. But yeah, I should have just bought my way into the New York Times, and then I'd have a New York Times bestseller. And I don't know, maybe my wife would be impressed, but she'd ask me where the 50 grand went. So,
well, good. I don't want to take up any more of your time, but thanks for being with us.
Thanks, Paul. I love what you do, and thank you for including me.
You've been listening to Outcome by Design with Paul Weinstein. Don't miss any of our upcoming stories from the tech world. Subscribe to Outcome by Design wherever you get your podcasts. And if you enjoyed this episode, leave us a quick review. You can also send your comments directly to info@paulvweinstein.com. Until next time.